Hey guys, good afternoon and welcome to MF Corner. I'm Pavitra. With me is Sonal as always, and we do have a very special chat plan for you on the show in just a bit. But before that, the big news story today, of course, like we've been talking about, is that Reliance's financial services arm, Jio Financial Services, has demerged. It is valued at 261.85 rupees a piece after that special 1-hour price discovery session that we had this morning. This price, of course, is much higher than the company had indicated, which was at around 133 rupees. But, you know, the question we are asking now is how will mutual funds really treat this adjustment? Sonal, there's been a very interesting note by Nuvama that you've gone through. So take us through what they're saying.
Well, yes, it will be important because it will impact a lot of funds as well. So first up, Nuvama says that, of course, both the active and passive fund managers, they will treat Jio Financial Services at 261.8 rupees per share until it starts actually trading. But what will the outflow quantum be once it actually lists? So after T plus 3 days, where T is the listing date, 3 days after that, they've made some assumptions how they will be sold by both funds that actively look at the Nifty and the Sensex as well. Nifty 50 index passive trackers could sell around 90 million shares, which would be around $2 million in terms of value. Sensex trackers will be selling around 55 million shares, which would be around $175 million in terms of value. That is what is expected after it lists, and this is 3 days after it lists. That is Jio Financial Services. But do passive fund managers have to make any adjustments today? No, because it's just a demerger that has happened and a price discovery so to that. But at the end of the day, index weightages will automatically adjust to the free float market capitalization, and that does not need any sort of interruption or fund buying or selling as well. Actual churning will happen when the listing actually happens for Jio Financial Services. Now, how will it impact index funds? Of course, we've been talking about weight changes as well. So Reliance Industries' weight in Nifty 50 index will move to 10.1% versus 11% that it is right now. In Sensex, it will move to 11.8% versus 12.8% that was yesterday on July 19th. And there will be actual buying and selling amongst constituents and the other constituents only once Jio Financial starts trading. It will be the 51st stock. When it lists, there will be removal as well. But till then, this is what the mutual fund industry take it as it goes. But there will not be any impact as of now, only after Jio Financial Services lists on the bourses. Okay, that is about Jio Financial Services, the big story that we've been tracking. But let's come back and talk about the topic that we are going to be discussing today. We are going to be talking about quant funds and quant investing. It is still at a nascent stage in India, and we need to understand more about this, and it has gained some interest as well. So let's move on and get to our guest today. What will it be like and how do they differ from the normal funds? Sandeep Tandon, founder and CIO at Quant Mutual Fund, is joining us now. Mr. Tandon, good afternoon. Thank you so much for joining us. Well, of course, the first question is, what is the genesis of quant funds? How do you fund managers really look at this particular scheme?
So it is very interesting to know how exactly it is evolved. You know, if you recollect, I'm just trying to link with some of the crises, like 2000 crisis happened, you know, the dot-com bubble happened. Prior to that, it was all about unidirectional approach where the entire world was focused only on the qualitative aspect, okay, of the investing. And in that crash, people learned that qualitative is not important. People have to understand other aspect also. That's the way post 2000 crisis, we saw the genesis of quant based fund came into picture. So apart from qualitative, people start looking at quantitative in a big way, and that is the area which succeeded quite well, where quant fund gathered momentum. But if you recollect 2008 crisis, okay, the Lehman bubble burst happened, even best of the quant fund also collapsed significantly, they underperformed. And after that bubble which got busted, somewhere right from 2012 onwards, we have seen other dimension came into picture, which is more on the behavior aspect, the sentiments data, which is now people call as quantamental. So right from starting point was pure qualitative, then second dimension came on the quantitative side, and the third dimension came in 2012 onwards on the sentiment side. That's the way it is very important to understand. Though everybody tried to say it's in India, it is very myopic view. People talk about quant-based fund, but globally it is now evolved towards quantamental.
Okay, Sandeep, thanks a lot for joining us today. You know, you and I have spoken at length about this entire style of investing, right? Take us through a little bit, because I think in India, a lot of people are still not very well aware of what really happens. I know you follow the VLRT framework, so do you want to tell our viewers about that? And also a little bit about where quant funds in India are right now in terms of the assets managed, the number of funds, etc.
So, what exactly happens when you talk about pure quant based fund, it's more obviously is mathematical and statistical aspect comes into picture. And then if you look at globally, it has evolved a lot. I said is now moved towards quantamental side. But if you really look at in India, when we talk about quant, it's a quasi active and quasi passive, because we have built systems around that, and it is like certain backgrounds are there, certain backtesting models people have built. Based on that, these quant based thesis has built. Actually, it is largely a factorial based thesis. Okay, and some people call it a smart beta, but ultimately these factor based thesis which got evolved over time. Now a lot of people talks about certain perception about things, certain advantages, because if you look at in India, when you talk about back testing, what data we are talking about, we have just only 22 years of clean data. Okay, so if you really want to really run any quant based model back testing, 22 years is very shallow period to really come on a consensus, or come reach a point where you can say these data points are effective. That's the reason most of the work which we do, we try to get into US market, which has history of more than 100 years, or you try to look at the currencies and commodities market, which has history of hundreds of years, like agri commodities has a history of 300 to 1000 years. So then it is more effective. But if you try to look at a very small period of time and then try to say this is a quant based thing, I think we have seen most disaster rather than being success about that. So in India, it's a very myopic view. People talk about factor based thesis, and if you ask me, globally that thesis has actually failed, and now towards quantamental side it is evolving. But in India, we still use old thesis of quant based thesis, which has been working for a while globally, but it's changing. But in India, unfortunately, we have not changed.
Okay, so that is something we'll discuss with you in greater detail as well. But Sandeep, you spoke about how it is quasi-passive and part active investment in quant funds as well. How does the fund manager's contribution on this one works? There are some other features that you can talk about and how it differs from other schemes.
So obviously, other schemes, people are largely managing active fund schemes in India. When I say partly passive and partly active, is that because you build certain formulas around that based on the what parameters. Somebody talks about growth or value or momentum or various parameters. You can get into as simple as one factor model, and you can create like the way we look at the multivariance model. So it's up to depending on what the mindset of individual money manager and what data point he or she is comfortable. So you can create those models. So it becomes a predefined formula. If this happened, then this is the way you look at it. So it's basically largely a filtering process where you are trying to, in simple terms, we call it screeners, and you filter. But here you create a program around that. If this event happen or these data points emerges, we will try to take it. And so when I say quasi passive also, so a lot of people rebalance their portfolio quarterly. Some people look at as quicker, like monthly also. Now people have started doing bi-monthly also. But globally, it has been a quarterly sort of thing, and something similar started in India because earning seasons comes on a quarterly basis. So people like to prefer to rebalance their portfolio on quarterly basis. But the way data points are changing globally so dynamically, people have started rebalancing their portfolio on monthly basis also.
Okay, got that. A little bit about the different types of quant funds. I know you briefly did mention a lot of them, but do you want to break it up within quant style of investing? What are the categories you can look at?
So it's also depending on the what asset class you're using at, so you can get into multi-asset quant fund, you can have a single asset quant fund, you can have a hybrid quant fund, and similarly you can have even complex ETF around that. So in India it is not allowed, but globally complex ETFs also revolves around that. So it's depending on the asset classes combination, and then a lot of people claim themselves they are value investors, so they build around largely focus around the value thesis. But of late we have seen a blended approach where people try to combine growth, value, momentum, and so on. Many parameters they try to look at. So it's a combination of asset classes, combination of various factors which you look at, and very most important aspect is the risk profiling. What duration you are looking at, because when you talk about quant based fund versus active fund, because in active fund people do take long term view, because managing long term risk is relatively easy. When you talk about quant based fund, the expectation is generally that the money manager will manage the short term, near term, or medium term risk more effectively. And if you can do it, then obviously you're able to generate superior alpha over traditional managers. But it's very important what mindset you have in terms of risk adjustments.
Okay, we take that point. So those are the different types of quant funds, and of course everything requires detailed study and an expert analysis or view as well. But Sandeep, stay on. We'll slip into a quick commercial break, and on the other side we'll continue our discussion and understand all about quant funds, what it means for retail investors as well. Stay tuned for that. Welcome back. You're still tuned into Mutual Fund Corner. We still have with us Sandeep Tandon. We are understanding everything about quant funds. Well, you know, Sandeep, we spoke about how it is little technical. There is a lot of expertise required as well. So who can invest in quant funds? Can it be done directly by a retail investor, or is there a need for an expert here?
Be candid with you, for masses or retail investor, it is a difficult product. You should not try, because the expertise which is required in terms of building processes, investment needed on the technology side, and the equipment aspect, which is also very important to understand these various factors which we are talking about. And it takes time to build these processes around that. So it's not very feasible for any layman or masses or any retail investors to create a structure like that. And if you really want to participate in any type of quant fund, then I think 6, 7 or 7, I think currently 7 mutual funds offer quant scheme. One should look for that options. Or such products are also available through various AIF routes also, but again, that is not meant for retail investors. So AIF also is many people, the big list is quite large actually, you know, and a lot of many people, the AIF side actually offer a complex quant products.
Okay. So, you know, the fact that there is so much expertise required, this is perhaps a little bit of a technical, you know, space, could be a factor to consider for someone getting in. But Sandeep, what do you see as the key advantages of investing in a quant fund? Because this is very different from any other kind of fund.
See, I tell you, the biggest advantage which you have is that, which is from our experience, we can say that, you know, we try to remove human biases. Okay. So when active manager is there, he or she has their own biases about it. Okay. So that is the big problem when you manage a traditional approach. When it comes to quant fund, then obviously you have built processes. See, one can debate whether those processes are right or wrong. That's a secondary issue. What success rate you got it. But ultimately you have built processes around that. that, it eliminates human biases, so that objectivity is far superior out there rather than depending on the money manager's subjectivity. So it is all about objectivity which comes into Quant Fund. So if somebody can really build a good quality algorithm, if somebody wants to understand, or complex, what we call it, a complex what we call it, a quant model, sort of the multivariance model, what we build at our end. If you can build it, then I think it is a far superior product than traditional money managers. But it's very important what tenure, what thought process you are looking at. So it depends on that also. It's not just one thesis you build and you can construct a quant fund.
That's right, actually. It would require a lot of research. It's all about a lot of numbers in terms of technical sense as well. And as you said, if you get into it and you build those models perfectly, the returns could be higher, but it comes with its own risks as well. Sandeep, what about quantitative ETFs? How do they work versus, say, a fund?
There's something similar, the way you manage, how like you manage a normal index fund. If you manage, and you can offer something similar product through ETF, the only advantage is that the cost structures are lower on the ETF side. But in India, ETF is not very effective right now, because will not going to be very effective in this space, because the quant fund, very small corpus, if I'm not wrong, maybe 3,500 odd crore is the total corpus of the quant schemes in the mutual fund industry. So very early, very infancy stages or nascent stages, unless you see these schemes also develop. So if you have a full-fledged quant products available, multiple schemes available, then you can think of launching ETF around that. But without a good schemes available, because there's too small size which we are talking about. So ETF does not make sense at this stage for the quant fund at least.
Okay, so I think we've discussed a lot about the quant funds, how these work, the benefits, the risks perhaps as well. But Sandeep, one question we get about every mutual fund that we talk about is, what is the tax situation like, especially considering that there are so many, changes being implemented. Is this pretty much like any other equity fund?
So yes, all the 6-7 schemes which we have, all of them you have to maintain your 65% equity exposure. So effectively, you get equity taxation, and that's the way it is the better tax efficient product in that manner. So it's not about that here we are talking about large cash level. Like multi-asset, you can still have a different taxation because you have 3 components or 3 different asset classes out there. But here is only one asset classes, and you have to maintain 65%. The industry is maintaining. So it's a good tax efficient structure is already in place for these quant funds.
Okay, all right. We've discussed it at length, but I just wanted more sense from you here. You did say that in India, the penetration is not so much. We still only have 7 quant funds in the country, and that is what is available for anybody to invest in as well. So they are still at a nascent stage. Can you tell us what the difference is when it comes to global quant funds versus our own country? What do you think would be needed in order to ensure there is better penetration?
So as I explaining in the from a global context, let's take about from a global perspective 2 countries, particularly US and Japan. These are the only 2 countries which I can really call them as a very evolved country when it comes to these complex products. When you talk about quant fund, as I said in the beginning, from qualitative to quantitative, the relevance, the way quant was managed globally has changed. It's become much more complicated. Actually, people use a very complicated multivariance model. Okay, and I said that apart from qualitative aspect and quantitative aspect, the third dimension which has come is the behavior. So that's the reason the quantamental type theses are evolving, and there are many hedge funds who run these complex quant products also. They do capture a lot of data related to earth analytics, related to social media, and complexities are even much more when you bring multi-assets together. So globally, this is a very complex area, and with the evolvement of AI or machine learning, I think this is area which will gather attention. It is actually gathering attention globally in a big way. I think India is still in the very early stages, so it has a lot of good potential from a long-term perspective.
Okay, and since we are still at a very nascent stage, like you pointed out, what is planned from Quant Mutual Fund as well from you guys? Are you looking at any new funds in the coming few months, years? What is the plan on that front? And if yes, then what categories?
So within quant side, we already have, we could be the only house who have launched actually in India Quantamental. Is a thesis which I explained. So we have Quantamental fund in the quant side. As for other schemes, this process, we are in the process of just launching our manufacturing fund now. And I have talked about that we expect between July to September 2023, where see the India risk appetite should also improve. Liquidity conditions are already superior right from November 2022. It's a very apt time for launching the thematic fund. See, in the thematic fund, the challenge is the risk is always going to be on a higher side. But if you can time the thematic fund, then you can generate superior alpha, and extraordinary alpha can be generated if you can time the thematic fund right. So we believe this is a very apt time. That's the reason we recently launched our pharmaceutical fund. So we talked about healthcare fund because we personally believe those data points have come, whether pharma as a cycle or healthcare as a cycle has bottomed out. So it could be a great opportunity. So that's the way we are looking at launching a couple of thematic fund in this category to optimize this opportunity.
Okay. Sandeep, when we say we can time some of the investments, like you said, pharma, it is a good time to invest into the pharma space and thematic funds as well. Is there a way we can time quant fund investing, or is it solely on the basis of how the numbers are running? You also said there's minimum fund manager interruption in that or contribution there, so to say.
See, I tell you, it is very difficult to time though quant for also from the SEBI definition is a thematic fund, but in real sense, it is not thematic fund. It is evergreen product sort of thing or whether portfolio you can build. So you can't time the thematic fund in any manner. But what is very interesting to understand is that the complexity, if you can really create a complex structure and since the data points are evolving and you keep on updating and keep on evolving, this was a evolving as a fund house, we are very evolving, and similarly quant, you can't just say these are the model I have built and worked for 20 years, I have backtested is very effective and realize they are not. So you have to continuously updating about these data points, and if you can do it, then you will be more successful.
Okay, that point is completely well taken. Sandeep, as always, thank you very much for joining us and explaining the entire quant philosophy to us and how you really go about investing in this. Very interesting chat. But with that, we're going to wind down on this edition of Mutual Fund Corner. Thank you all very much for tuning in, and we have closing bell coming up after this very short break for the final hour of trade.